Hey guys, so look, I haven't done a public video for quite some time. I think it was the 10th of June was the last video. And, I think for me, it's always difficult when people only see what they want to see. It's always very difficult when people don't understand, much of a big picture. And, it's very easy from a professional standpoint to look at this in such a big picture. A lot of people don't understand how that affects the price in terms of the time frames they are trying to trade this on, right? So I'm just going to go back and just re-emphasize some of the logic, some of the things that I've tried to cover over these last 18 months, 2 years. And the one thing for me, I guess, kind of inside the echo chamber, right, is don't take this as a negative. I've never tried to bash Bitcoin. The general idea is from the very lows in terms of what we saw earlier this year, obviously end of last year and so on coming down, we had three options, right? And these three options, these are exactly the reasons, the rationale, the logic behind why and how you can assess such big moves, right? Now, as a retail trader, majority of the time you're trying to make money on this every single day. As a professional trader, I don't mind making money out of this once a month, once every 3 months, right? It's not a problem in terms of trying to capture every single swing. When you look at the big picture, if the price had come down from that 69K high, right, we had an option. And the option initially was if this was a much, much larger swing, you're going to need to see an ABC move down, right? Just to kind of keep in tune with the Elliott wave cycles and the Elliott wave moves. Now, if you assume that move happened all the way from the inception of Bitcoin in 2009, all the way through to 2023, 2024, you're talking about a long, long time, right? You're not going to have a retracement move in 3 months after a 15 plus year move up. Right? So, option number one, accumulation. Right? Now, this is obviously the area that everybody wanted. This is the area that everybody was keen on. This is off to the moon, and here we go. For accumulation to happen in a larger scale like this, time is pretty much very important. Right? Now, obviously, a lot of buy-in can happen, but you have to remember who the buyers and who the sellers are at any situation, any point. Right now, even if I wasn't talking Bitcoin, you'd have to read into this in terms of why. What is the logic behind such a move, right? Now, again, for a lot of you guys who just want up and everything else, right, this is something that you're not ever going to comprehend. If you're willing to spend the time and you're willing to, hear this out, you're willing to understand why the market moves, even down to the shift that the ETFs would have had in terms of the market dynamic. So, if we look at a couple of these things, in terms of, first of all, the accumulation cycle, the accumulation size and scale. We didn't really have that, right? So optimal position for the best outcome for Bitcoin would have been a move up to around the 28 to 32K level, which is quite a broad range. Then coming back into this accumulation cluster, allowing more time for the larger players to want to move this beyond that 69K high, right? So that's option one. The second option was okay, right? But it would have added another 6 to 12 months to this bigger cycle. Okay. The second option would have been after leaving accumulation, if the accumulation had done enough of its job and enough was accumulated, we would have seen a move around the 48 to 50K level, which would have made it an optimal zigzag type pattern, right? And therefore coming back into around the 30K level, right? That could have been 25, could have been 30, but this would have been the second best option because it would have taken obviously a little bit more time, but it would have given again the bigger players enough momentum to carry it through and above and beyond the 69K. Right? Now, the third option, which ultimately seems to be the option that's played itself out, the reason that this was the worst option of the three is that seeing a triple top, right? The momentum that carried through from the 30 to 48 was on the ETF news, BlackRock being approved and all this kind of stuff, which means the price was already built in, and it kind of almost fumes rather than fuel. So at this particular stage, what you have to realize and remember is that as we break the 69K level, you would have expected a lot more orders to the buy side being triggered, right? Fueling the move, way beyond. Instead, we've seen a 65, we've seen a 69, and we've actually seen a 74. Right? You see the kind of the momentum, the pattern, right? So the question then becomes, who's selling? Right? Now, this again is something that a lot of people can't seem to comprehend, right? They assume that the ETFs are all, bullish because the big boys are getting in, and it almost couldn't be further from the truth, right? Now, at this point, you're going to say, oh, I'm not listening anymore. Let me just show you a couple of different articles to kind of support this in terms of the notion, okay? So the CEO of ANEC basically said that the inflows that they were seeing back a few months ago, 90% of the inflows are retail, right? Now, this could be a couple of different things. This could be a couple of different reasons. This could be a couple of different, kind of problems. This could be a couple of different scenarios as to why it's happening and why it's happening the way that it's happening. Right? Now, for example, if you were to take an IFA, an independent financial advisor, and you now have exposure to your client's money to invest in something like Bitcoin, this still doesn't count as institutional money flow. This is still retail money flow. So, if this is something that's been said, right, a few months back, what would be the benefit knowing that retail buy into this, knowing that retail, are in this echo chamber, knowing that retail are wanting these kind of crazy prices? Well, I know the best thing I could do is let's give them crazy prices, right? Now, if we scroll up, let me just find the actual title of this itself. All right, there you go. Here, 350K. Right, this is the title, right? And this is the only thing that I'm reading, the only thing I'm seeing. So we got the same guy within a short time span of each other, right? In terms of the two articles, saying 90% of the buyers are retail. How do I attract more buyers to my fund? Well, let's give them a crazy figure. Right? So this is ultimately the way the market works, right? This is where the liquidity comes in. This obviously is, the kind of story that we're likely to read. A lot of retail traders will see this and say, oh, there's 107 billion coming into Bitcoin, right? Without reading the full text, right? Without understanding the context behind this particular play, right? And obviously what's just been said. Okay, so with that being said, let's just use this 350K as a great example, right? Now, if you follow people like Plan B back in 2021, you're probably still waiting for 98K or 135K. We are 3 years plus down the line since that particular call, right? So, knowing full well that the accumulation didn't play out the way that we wanted it to, the best way for the scenario, is that we looked at option two, and again, option two didn't play itself out. It carried on up and kind of went up on the fumes. We then go past somewhere that you'd expect it to accelerate, and we didn't accelerate. We actually slowed down and almost reversed, okay? So let's just use this 350K as a kind of benchmark kind of area, right? And I've done a little bit of work kind of on this to kind of highlight the I guess the craziness of this, right? And then it's down to me to ask the question as to what are you seeing in terms of how you get there, right? So if we look at the market cap at the high, we were seeing $1.451 trillion. Okay, I've highlighted this here. What I've then gone and done is I've gone and asked ChatGPT a couple of questions. So the first question for you to see, I'll scroll this up all the way to the top. And the first question was, if there are 21 million coins in circulation and the market cap is 1.451 trillion, and the price was roughly 74,500, sorry, what would the market cap be at around $350,000 a coin? Okay, so pretty straightforward. There's nothing kind of hidden there. There's nothing complex in terms of the calculation, right? So I've asked the question. Okay, now this is based on the full circulation of coins. The answer comes back just over $7 trillion. Okay, now bear in mind we're only 1.4 and a half, right, at its peak. So in theory, we're looking for another, $7 trillion, right, which is another, $6 trillion from today coming into the market. The question is, where from, right? Let's talk about the halving. Let's talk about the price multiplier. Let's talk about the 12 ETFs, or Trump and Harris both endorsing Bitcoin. What's the catalyst? And this is the main question. Okay, and this is not me saying, oh, I'm anti-Bitcoin. I'm asking for the logic. I want this logic broken down as to why we would double, triple, quadruple in price, especially in these time frames that these experts have actually claimed. Okay, so what I then done was I went away and I thought, well, actually, there's not 21 billion Bitcoins in circulation. The question, clear as day, is how many Bitcoin are in circulation? There's currently 19,812,125. Okay, so I've gone away and I've asked this as the question, as the second part of the question. Let's look at this. Right? So we basically dropped the level from 7.3 trillion to 6.9 trillion. So at this particular point, let's just take 500 billion off the table. We're still in a situation where we need at least $4 trillion plus to come into the marketplace. It's only taken 15 years to get to where we are right now. And the assumption is by the end of the year, we will have at least 4 times as much income coming in, right, capital coming in to this price multiplier, right? You see how crazy this is starting to sound? Okay. I'm not saying it can't get there, and I'm not saying it won't get there. I'm not saying we need to drop down to 9K. I'm asking and saying and trying to get you to ask your own question as to how this gets to where the expected prices are. Okay. So all this being said, let's just look at the growth calculation. And this is just to highlight, how obvious this isn't. Okay. My question to ChatGPT was, if Bitcoin was to grow to $350,000 from its current price, and this was obviously a little bit earlier this morning, 55,800. If we look at this particular point, right, we only need $294,200 for us to reach that target of $350,000. So the next part of the question was, if it's September the 6th today, and we're looking at this price target, which is what Saylor's talked about the end of the year, Vanek has talked about the end of the year, right? A lot of people on Twitter and YouTube, all these influencers, it's it's the end of the year, it's just after the halving, we've never had a halving like this before, and all this kind of stuff. The question then is, we're going to need to see, and this is just a rough kind of an assessment, because obviously you could have days that you have a 5K candle, and other days that you have a negative candle. We're not going to have green candle, green candle, green candle for the next 120 days. Okay. Now, just trying to break this down into some form of reality, we would actually require a net positive per day, $2,536.21 per day between now and the end of the year. Okay, so when you put all this together, there's a couple of big questions starting to form. Where does the additional X number of trillion come from? Right? Why is it the end of the year? Is it Lambos for Christmas? Okay. And ultimately, as the price is currently dropping, we need to ask ourselves the question, well, if retail are the buyers, clearly retail are the buyers, okay, who are the sellers? Well, this chart shows the leverage funds and their current situation, right? And the blue is actually the shorts. So we've got retail buying on the assumption that we land 350k. Okay, we've got the CEO of one of the largest ETF providers putting it out there that 90% of the buying is coming from retail traders. What advantage does he have by claiming 350k, 350k, 350k? Well, the advantage is clear. Commissions on the retail buying through an ETF that he provides. Simple as. So if the leverage funds, these are the big players that are trading against the retail traders right now, these guys are quite happy to sell at a premium to the individual retail traders willing to pay a premium. And this is a big, big point, guys. Okay. So in the grand scheme of things, right, I see this future growth. I see this future potential for Bitcoin. I see there is a place in the world for Bitcoin. However, what we have to do is to be realistic. We need to understand the journey, the path, right? The transition from a kind of plaything with some investors dipping their toes in the water to an actual institutional tool that has a use case. And that's the real value in terms of the transition. Does Bitcoin need to hit 100k by the end of the year? Definitely not. Does Bitcoin need to hit 350k by the end of the year? I can't see how, if I'm honest. Okay. So the question isn't, are you long, are you short, are you pro or anti Bitcoin? The question is, how realistic are these numbers that you're seeing out in the influencer space? Okay. And that's really all the update that I have currently in terms of the situation. I've obviously shown a couple of the short time frame moves. And again, I've shown these kind of on purpose in terms of just understanding where and why some of these, this is actually Euro there, some of these moves, why these moves will do what they're currently doing. Right? Now, one of the areas that I talked about recently was this, right? And this was on the back of a couple of other moves from the next signal. And, the point was talking about the move down, why we would come from there, why we'd go back up to the 65, to the 65.50 range. And, that's exactly what we did. We went up, so I think it was actually $60,050 before coming down. Then ultimately we wanted this little move back into the range, and lo and behold, we have this right now. This isn't for me to say, hey, look at this, I've called these moves, I've called these moves. This is more for me to show how institutionalized these moves are becoming, right? We come up into the box and we drop down. That's a reaction. The reason that it's a reaction is that there's liquidity there. Understanding the keys of liquidity will unlock the market. All right. So I'm going to leave it like that. Thanks for watching. Obviously, haven't been doing this for a while. There's been not really that much to say. If anything changes, I'll probably do another stream. If not, probably see you again in a couple of months. This isn't for views and followers. This is ultimately just market commentary on something that is pretty much gone sideways. All right. Anyway, see you on the next stream. Cheers, guys.